Welcome back to Inside the Boardroom. I'm Rachel Lee, and in this segment, we're going to talk about Inverite Insights, a company that's rewriting the rules of credit assessment. According to Inverite, 90% of lending decisions in North America rely on information provided by TransUnion, Equifax, or Experian. Over 78 million North Americans are financially excluded, though, due to lack of credit on these bureaus. This means that millions are underserved and or lenders lack accuracy when it comes to assessments. So with all this being said, what's the business case for Inverite? Here to tell us a lot more is Karim Nanji, CEO of Inverite. Karim, thanks for being here. Like I said, give us the business case for Inverite.
Absolutely, Rachel. Thanks for having me. Inverite is a leading AI-driven software provider, and we specialize in real-time financial data. We extract information from consumers' bank accounts, and we take these data points that are collected through our SaaS-based ID and instant bank verification technology. Our platform is integrated into the lender's online application systems, and these lenders use the data to validate identity. They use it for risk management as well as for compliance. So we empower financial institutions, lenders, financial technology providers with advanced data analytics, and it allows them to enhance their credit decision-making by giving them insights on the financial health of the consumer. Bank account data is more predictive because it's very forward-looking based on spending patterns, payment patterns, and transactions in the bank account. Lenders rely on conventional credit scores that we've seen. We've seen TransUnion, we've seen Equifax. In Canada here, people have heard of Credit Karma or Borrowell, and they use credit data from either Equifax or TransUnion, and they provide it to the consumer. What's happening in the industry today is these conventional credit scores are very backwards looking, and they don't give a good indication of actual predictive behavior in the future. So our data is based on financial bank account activity. We gather up to 12 months of data and the transactions on an individual's bank account transactions. And in there, we see payments such as utility payments, telco payments, and potentially even defaults on payments. So rent, mortgages, we see all that. There are other competitors in the industry that also provide information from bank account transactions. What makes us different from our competitors, our focus very much on data science to provide scoring algorithms that complement or in some cases replace the credit scores that you get from traditional credit bureaus. And at the same time, we're also providing verification solutions associated with identifying that the customer is who they say they are. So there's a lot of fraud that goes out in the industry, and those are the key differentiating points that we have with respect to our competitors.
Yeah, that kind of goes into my next question, actually. And that's all around what makes Inverite a good investment, especially for investors who are new to the space and kind of lightly understand what's going on here in the industry that you're in.
So one of the major issues in the industry is data deficiency. Lenders are lacking alternative data at the time of adjudicating and making a decision on that consumer. So they lack the advanced analytics and information needed to underwrite what is typically known as credit invisible non-prime consumers who may be off the grid, so to speak. And so conventional credit scoring systems don't represent a large segment of the North American population, and you referred to them in the opening there with the data that you provided and the statistics. And this makes the lenders less confident in these scores. And so what happens? You're approving somebody that should not be approved. You're declining somebody who otherwise should be approved. And so Inverite presents an opportunity at the forefront of probably the largest growing segment with respect to the underbanked. More and more consumers are on the outside looking in. Banks are firing a lot of consumers. They're not renewing mortgages. And so where do these consumers go? They go into the alternative finance industry, and it's a very huge industry and it's growing. Recently, the last Canadian government budget announced plans to legislate and facilitate the implementation of what's called open banking. And this has prompted an increase in discussions around this topic. And so banks, from the top end echelon of the industry down to people more on the alternative finance end. They're now seeing open banking as a step forward towards digitizing financial data and ultimately empowering the customers to control their own information, right? It's the consumer's information. It resides with banks, and open banking provides protocols that allow everybody to interact with fair competition and allowing businesses to be able to transact with the consumers with consumer consented data. So consumers are demanding more control, Rachel, over their financial data, and open banking is empowering them to manage their finances better. But what's actually happening is that it's making it a lot easier for consumers to access credit. It's giving lenders a full picture of the consumer's financial health, and it's allowing for more accurate credit assessments in general. This means better loan terms for consumers, access to credit for people who may not otherwise qualify using traditional credit scores. So to answer that question more succinctly, Inverite is uniquely situated at the forefront of this opportunity. And it's one that Forbes referred to as the next $1 trillion opportunity in fintech.
And you've got a sizable number of unique customer transactions so far. It's 4.5 million. What's the roadmap to keep growing this base?
Well, it's as we're looking to grow and open banking, there's a lot of market dynamics happening at the same time. We are in a very kind of recessionary type atmosphere where individuals are not getting approved for credit. In Canada, for every dollar of disposable income, Canadians carry about $1.80 of debt, anywhere from 170 to 180 of debt. So that means Canadians borrow quite a bit. We've seen an advent of buy now, pay later. We live in the Netflix generation where people want what they want when they want it. So I can't afford that $1,000 couch, but I can afford $100 a month. So with these changes in consumer behavior, and especially with macroeconomic environment of inflation and high interest, we're going to see a lot more consumers looking to be able to access credit in alternative means. So our roadmap is to continue to provide additional products and services, additional partnerships, additional verticals on where we're providing our verification solutions. And that's where you're going to see the growth, coupled with the fact that the federal government, working with the big banks and the big players in the industry, are looking to legislate protocols to be able to make the transfer of this data at the will of the consumer. And that's going to lead to further growth and fair competition in this industry.
Yeah, and Karim, there's a lot to unpack there with the topics you've hit, but I want to zero in on near-term catalysts. Can you tell us about what the audience can expect when it comes to the next few months, maybe even up until the end of 2024 for Inverite?
Absolutely. Okay, so I touched upon it a little bit briefly on the other side. So kind of getting a little bit deeper on that side, Rachel. Investors can anticipate near-term growth and the catalyst coming from product enhancements, market expansion initiatives, our focus on scaling our technology, our infrastructure, broadening the market reach, as I mentioned, to drive further revenue growth and solidify our market position. I talked about the open banking and consumer-directed finance, and that's very key, right? Because there's several. This is one of the several key catalysts that's set to drive growth in the near term. We're actively working on refining and expanding our platform to incorporate new features and capabilities that our customers are asking for to help speed up the transaction with respect to automation. You're going to see a lot of us participating more, especially in the automotive industry, where there's a lot of inefficiencies, a lot of players in the industry, from the consumer to the lender to the dealership to the technology systems. And there's inefficiencies there with respect to data that we can help solve and help automate. Our upcoming product releases are going to be designed to address emerging needs in the industry, ensuring that we stay ahead of the market. We're seeing certain trends in the industry with respect to smarter fraud fighting, consumers wanting to be able to pay by bank. And in addition to that, we're also paying attention to what the federal governments, both on this side of the border and south, are focusing on. So we want to be able to expand our footprint into new markets and segments. and also leverage some of our recent collaborations to tackle the problem that we're having with the underserved market. The financial inclusion and exclusion are a global phenomenon, and they do happen also in first world countries. And that is referencing the consumers that are either new to a credit, new to the country, people with damaged credit that have rehabilitated. Ultimately, all this is expected to generate increased interest and adoption of our solutions. Our near-term strategy also includes the launch of targeted marketing campaigns to increase the awareness and adoption of our solutions amongst financial institutions. With the feds announcing that they're backing open banking, a lot of people that once upon a time were not returning my calls are now returning my calls because it's very similar to Y2K. It's kind of uncharted territory, which brings a lot of innovation. And so we are also investing in expanding our sales and support teams to ensure that we can meet this growing demand. Furthermore, we're also actively exploring opportunities to integrate our technology with other emerging fintech companies, very much in terms of embedded finance, embedding our solution into other platforms, and using a distributed sales force.
And in your latest financials ending in June 30th, 2024, I also read that you've made some progress on breaking even, especially because you have over 2 decades of experience building tech companies. I'm curious how you're going to be balancing all of this growth that you just discussed and inching closer and closer towards being cash flow positive.
Yeah, so it's been a tricky situation. We've actually made headways over the last couple of years, as you can tell through our financial statements. Right now, we are getting closer and closer to profitability. I think with what's happening with market dynamics, it's added validation to our product. Market statistics are saying increased fraud, less approvals, more delinquencies, and so our solution is actually ripe for industry players and for us to continue to grow. Selling new products and services to our already existing base will allow us to penetrate the wallets of our customers already, so we can increase the revenue and the growth that we're getting based on the solutions that we're providing and the problems that our lenders are having. At the other end, as I just mentioned, looking for other companies that can accelerate our growth through accretive acquisition of both profit, EBITDA, products, and synergies. All those is a combination that we're managing delicately and leveraging it as we see these opportunities to continue to grow and get to break even this year and in middle of 2025.
Got it. Well, Karim, thank you again for being here. Our audience members can find Inverite Insights under INVR on the CSE. Thanks for watching, and we'll see you again next time.